Good evening, everyone. Welcome to RadioSilentPlay.com. I am your moderator for today on April 27th, 2014. Let me start off by saying I am not a financial advisor. Please do your own due diligence before trading any stock or options. Trading stocks and options can accrue lots of risk. Today I will be talking a little bit about how we set up these stocks, whether it's options, whether it's stocks. Just want to explain to you what this basic, what I call it is a stealth chart. The stealth chart usually tells you where the institutions or the smart traders, the smart money is coming into the market. Alright, this is very important because pretty much the Radio Silent Play system, it pretty much follows off of what the stealth chart does. Alright, usually when I send out a stock, I look for this level right here, a major support line. Usually a major support line will be a bottom or near a bottom or a 50-day moving average or a 20-day moving average, depending on where the massive support is. We're going to take into consideration level 2 support and also basic chart analysis that shows levels of support. When I send out a stock, it's basically for members in the Radio Silent Play team to accumulate or enter at the lowest point in time. You will have times where these stocks will have minimal volume. Minimal volume due to the fact that the stock is near lows. Traders have the tendency to not want to buy lows. Traders usually they look for liquidity. Some traders have different strategies where they like to buy once the stock starts moving. I kind of think of the contrarian aspect. I actually look for major areas of support or pattern trades where trades actually bounce in different levels. Sometimes this system works, sometimes it doesn't. But with that said, the major objective is to actually manage risk, maximize profits, and at the same time garner a safe entry as possible. Due to the fact that there's many traders out there looking at different types of stocks, I usually come out with a watch list. That watch list will consist of trades that either fundamentally or according to the chart is at a good level of support or near resistance, depending on what stock we're actually looking at, whether it's an option or it's a regular stock. I'm going to look at these levels. Now, the reason I call it the stealth phase is because usually around these areas right here at the bottoms, nobody wants to touch the stock. It's usually either hated or bashed, and just there's a complete sell-off there in this area. And this is the area that I call the blood range. Usually you'll have a bit of consolidation at this point because a lot of traders that actually bought at the highs are now selling for loss. So what I like to do is I like to look for that support line, which is pretty much this dotted line right here, and I like to buy in this area. I'll usually give out a buy zone range. Now that buy zone range, it's depending whether it's a 000, it's a 00. Traders must understand that those buy zones are usually near floor levels or support levels. Now let's take a look at a stock that I sent out, SPMI. SPMI, I told my traders to enter this trade at 0.005. From this time in March, it had a big rally from the 6 range all the way to 2. When I sent this out, it was around April, mid-April, and it was around this area. So I told the members to add during this area. Now you can see a considerable drop from this level down to here, which a lot of traders sometimes, just if there's no liquidity, if there's no volume, don't want to touch. From the mention, the stock actually jumped up to the 70 range and then actually dropped back down and consolidated a little bit. A newsletter actually sent out the stock, and the stock did a parabolic move to the 0.025 level. Now let's take a look at that chart again. The smart money was entering the stock at the 5-0 range. Okay, let's take, for instance, let's make believe this was the SPMI trade. Okay, it hit a high of 70, and then we had a little bit of a sell-off, which I considered a bear trap. Alright, and then as soon as that newsletter, okay, mentioned the stock, it took off. And then it did a parabolic move. Okay, it hit that 0.025. When you see that move, that's when you see a lot of traders jumping in on that stock. Now, some of the members in Radio Silent Play didn't buy the stock at this range. It's completely up to them. You know, whether they're going to buy during this consolidation period, or they can manage to actually, you know, weather the storm. And sometimes just traders don't have that heart, or you know, they think there's fear involved, and they actually won't buy the stock until it actually starts moving. Well, it moved, and you know, a lot of people gave credit to that newsletter, which I don't mind. I mean, as long as the stock moves and it brings opportunity for members, that's all that matters. Okay, now the stock hit a big topping tail. This is what we call a topping tail that day, and the stock actually dropped. And now we're looking at this stock to actually drop back down to this 20-day moving average. But let's take a look at that chart again. So you had the newsletter push that information out. You had the huge enthusiasm after nobody wanted to buy the stock at the lows, and then you had the greed, where some of the traders that bought at this range are actually holding the stock. They're not taking any profits. Then it hits that parabolic move and it hits that top. Then people start buying. It has a little bit of a jump. Okay, people think that it's going to go actually higher. It doesn't. And now it's now the fear starts settling in, and now that's where it's going to hit that level again, which is that 20-day moving average. And if you look at here, okay, it's about to hit that level. So an entry at the 0.006 may be a bounce level, because you'll probably have a 3-bar drop. Okay, but the reason I'm giving out or putting out this video is so traders understand that, okay, the reasoning of buying these stocks at near lows when nobody's looking is because you're actually in stealth phase accumulation. You're actually buying the stock before eyes go on the stock. Okay, usually when you go to a store, whether you're gonna buy you know, a TV, or you're gonna buy a pair of jeans or sneakers, you don't go in there just because the price is at a high price. Now, I really want traders to understand this chart, okay, and I want them to understand what the process is when we're sending out these stocks. A lot of people, a lot of traders are really frustrated on figuring out what entry points and why I send these out. I've had comments and saying, you know what, I really don't like the style. Okay, I really want to, you know, buy into liquid stocks. Okay, that's all good, you know, different strategies for different people. But I just want traders to understand that the reason that we do this is because we want to give RSP traders the best opportunity for entries. Now, most of the stocks that we send out, okay, are usually given at a good price range, okay, where traders are not chasing. They're actually under silent accumulation. And in the longer term, whether it's a week, 2 weeks, 3 days, okay, 2 months, they'll always have an opportunity to sell that stock higher. None of the stocks mentioned in Radio Silent Play have ever crashed. And when they do break below a stop level, RSP members are able to get out with a minimal loss. So I just want traders to understand that. I will try to give traders more tutorials. I want to help them improve their knowledge, and what it boils down to is about confidence. If traders understand the system, if traders come up with a plan, a routine, and stick by that routine, I'm going to say anywhere from 70 to 80% of the time they will have good trades. Okay, so just be aware of that. Okay, until the next video, thank you everyone for following RadioSilentPlay.com. Take care, everyone.